Hey guys, I hope you guys had a damn good Friday. I hope you made some money in these chart streaks today. I will say I did lose a play today. I traded SPY, Apple, as well as XOM. And yeah, I lost my XOM play down. Let's just not talk about that one right now. But however, I did win my SPY and my Tesla play, and I also entered into another play. So I'm gonna tell you that real quickly. So I had a student who joined into the trading mentorship program, and so she is officially approaching her last week, and she wanted to enter her very first trade together. Now, normally I recommend going into paper trade, but I said, okay, you know what? I'm going to give you a list of 50 low cap stocks that you can look at that has some low premiums, and that's allows you to do your very first one without having to put too much into it. Okay, she picked American Airlines, and so I said, whichever one you pick, I will enter into that trade with you. So she picked American Airlines. I picked everything that she picked. The strike she picked. She got two contracts. Now, if you're gonna be doing something a little bit bigger and just new to it, just go easy. You ain't gotta try to throw all that damn money in there and getting all them contracts, okay? Having these massive position sizes. But our strike was only $30 and she did two, so we paid 66, it was like $64 actually for two contracts on American Airline trade. So we got it for May 23rd as our expiration. And so it's fun. I'm excited to see how it plays out. I let her chart. I let her explain to me why we was getting into that trade, why she picked it. Why did you believe that it's going to come back down? All of that. I didn't. No opposition from this way. Okay. I said, look, whatever you say, I'm following your lead. So that's what we got into. And so, yeah, that was my trades for today. I had a few other things that I had to do, but those were just a few that I did. I wasn't in the charts for too long. Um, but yeah, so I hope you guys had a damn good day. And I hope the money was good. If you lost some plays, all I'm gonna say is don't dwell on them. Next week we'll be here and the market will always be there for you to try again. All right. So what I do want to talk to y'all about is someone commented on one of my other YouTube videos asking about leaps. What did it mean about leaps? And so if you see this, shout out to you, because I don't know why I didn't think to make a video about this, but it actually really aligns with some of the things that I want to talk to you guys about this weekend. Whereas I want to show you how to effectively chart to prepare for a swing position, okay, or a leap. Leap basically saying, okay, wait, hold on. Let's get into what the hell a leap is. You know how you get into a position, right? You pick your expiration date. Most expiration dates are 7 days, depending on, well, 5 days, depending on when you get into your trade. So when you get into a leap, you go a year out or you go into a new year. So if this is 2025 and you select a strike and an expiration with a 2026 expiration date, that is considered a leap. Or 2027, that's considered a leap. You are leaping from one year to another. It's just simple as that. Okay, so a leap trade or a leap strike, leap. Why do I keep saying leak? Lord, you are picking an expiration date that is in the next year or another year other than whatever year we already in. So when in 2025, any years after that that you select or however far out your brokerage will allow you to go, it's considered a leap trade. That's all that is, okay? So with that out of the way, I would like to stop saying leap, leap, leap. So let's get into the lesson, okay? So I'm going to go to Robinhood. We're going to get into Robinhood. And I wanted to do this. Let me see. I want to do this on the computer and make this thing a little bit bigger, but I'm going to probably go over here so we can make this thing a little bit quicker, okay? So I'm going to open Robinhood. And I am going to select a ticker, whatever, whichever one. And you can just pick whatever one you want to if you're using Robinhood. And if you trade on Webull, then you should already know as well over there, you can select your expirations. But I just want to show you guys really quickly what it looks like and to give you a few things that you need to understand when it comes to getting higher expiration date. Okay, so now I'm in Robinhood, okay? So I am going to pick, I've selected on Apple. So when we get to the option strategy builder, we can select what we want to do, okay? Or what we think things are, what we think is going to do. So if I say I believe it's going up, okay, cool. You guys see at the top where it got builder today, March 16th, March 23rd. Those are the expiration dates for our positions, okay? So if we're doing a leap position, we're going to slide this thing over and we are going to go over here to January 16, 2026. Now we are officially in a leap on a leap chain. So basically, they're just letting us know that all of these positions do not expire until January 16, 2026. And that means that we can hold this thing for as long as we want, or we just can hold it up until January 16, 2026. Now, I say as long as we want because that's, got a good route to that new year. So that's a long ass time. And that's a lot of time to have on your side. And it's nothing more important than having time on your side when you're trading certain stocks. Okay. So the first thing that I want you guys to pay attention to, let's say we decide we want to get a $200 call for January 16, 2026. Okay. You guys see how much that thing costs? Did you see how much it costs? $21.85. That's going to cost us $2,185 to get into this position. Now, if you're new to this, you might be trying to figure out where the hell I just got $2,000 from. Just because you see $21, that does not mean that's how much it's going to cost per contract, because the price equals one contract that involves 100 shares. So whatever price that you see, it will be times 100. Okay, I'll try to do some type of pop-ups with some calculation here, but it's not that hard, I promise you. $21 times 100. Whatever price that you see on this chain will be times 100, no matter what your expiration is, okay? So I want you to pay attention to that. The price, $21. Now let's go back. That was a $200 call, okay? Let's go to May 16th, which is next week, Friday. You see how much it costs to get into a $200 call? $2.99, meaning it will cost us $299. Now, why on earth did that change like that? We're going so far out. When you are getting higher expiration days, you are basically buying time. Okay, yes, you're getting to your premium. Yes, you are betting on the stock going in your favor to profit. But the further out you go, the more time you have to capitalize on that stock's movement. So therefore, you will pay more for the premium. Okay, so if we go to like June, a $200 call is going to cost us $620. Okay, so you guys see how we went way to 2026. It's going to cost us $2,000+. We come to June, it's going to cost us $6. But if we go to an expiration that expires next week, it's only going to cost us about $200. Okay, just on that particular call, that $200 call. Okay, so it's the same way with every last one of them. The different strikes will be different prices the further out that you go. Okay, and that's the one of the things that I want you to understand. So when you are looking to get a lead, or when you're trying to buy more time on your side, you understand why the price is moving up. Okay, you're just buying time, and this just gives you that, that leg room to let everything make its move. The next thing is this, if you're new to this, is that you do not have to hold your trades that long. You may be up $2,000. You been holding this thing 4 months and you up $2,000 and you're like, damn, I still gotta wait to 2026 before I can sell it. That's not how it works. You can sell your position when you are ready, as long as you do it before January 26th, January 2026. And on the day that it expires, if you're in profit, then that position will eventually close and you will get your profits. However, you don't have to hold that thing that long. If you up two bands and you're only 3 months into holding it, why not take it? If you have multiple contracts, sell one. If you have two, sell one, hold the other on for a couple of more months. You got 5 contracts, you got 6. Sell them along the way. This is something that I did with my Palantir play back in February. So I had 5 contracts on Palantir. It hit up there at, what was that, 124, 125 expiration. I mean, not sorry, expiration, all-time high. And I was like, okay, we don't got much data to go by up here, but once I start seeing that pullback happen, there's going to have to be a correction because Palantir shot up, okay? there is going to have to be a correction. So I am confident that this thing was going to come back down. Was I expecting it to come back down the way that it did? Not entirely. Personally, I was looking to get out at around 90 some dollars. I rode that thing from about 124 all the way down to $78. And I had a few months on my expiration. And what I did was I sold one contract as we got further and further down, and I sold the very last contract at $78. Palantir, it was 78, 79, one of them. But it continues to come down to about $66, and it finally ran back up over time to hit $130 new all-time high. And so it's starting to see that pullback again, and we're down to like 114, 115 right now, if I'm not mistaken, or 119. I think it pushed up to 119 today. So that's just how that could look. You can get multiple contracts if you have the capital to do so, and just sell off as you go so that you're securing profits along the way, just in case that thing decides it wants to go back in the opposite direction that you're planning. Okay, so I hope that makes sense. I hope that makes sense, and I hope that that gives you guys a better understanding of what leaps are, the importance of them. They are, you don't have to always get a leap, okay? You always want to focus on what you can afford, and leaps can be more expensive, but you do want to have time on your side, because sometimes a stock can move pretty decently, but you still want to be sure that you got time and you got room to let it play out so that you can maximize your profits, okay? So shout out to the person who asked the question, because it definitely gave me the idea to make this, which is probably overdue anyway. And then not only that, I'm going to talk to you guys this weekend about how to chart out and prepare for moves over time. And also I'm going to look at some of the ones that I'm looking at to enter into some leaps, and just like some month to expirations, so that I can kind of let it do its thing. If you have not gotten your trading journals or your little black book of candlestick patterns, you guys can find them below. And I will see you guys in the next. Wait, hold on before you get too excited on that exit one. Monday, episode 5 of Turning 100 into $1,000 will be coming. Okay. That one will be coming. So our goal, once we get to episode 5, is to officially hit our $450, $500 mark. But I'm going to have to really watch some charts to see which one is going to get us there. And I might just do us another hold, maybe a week hold, maybe a few days. Okay, so that's just that. So hope you guys have a good weekend, and I will see you guys in the next video.